Good afternoon, everybody. My name is Raymond Noble, and I work at Nexa Mortgage. We are the largest wholesale mortgage broker in the country. We have over 1,800 brokers nationwide, and we have over 180 different lenders that we do loans with. So I can pretty confidently say that any kind of loan as it relates to real estate, we have access to funding for. This presentation is going to be on a very good niche product, and it's called the renovation. So it fits into all of the different types of renovation types of financing. We have 5 different lenders for 5 different types. I will get into that, but I just wanted to say hello. Thank you for watching the video. If you have any questions, email me or call me. I prefer a call than an email. I'm a little old, so I like the phone better than I like digital information. However, I'm trying to step my game up and do some video. So give me a little love for that. So hey, let's get into it. The renovation loan is so let's define renovation. Renovation is financing for both the purchase of the house and the cost of the repairs or upgrades as one loan. So that is what is considered renovation. Um, it could be things that are required, health and safety, roof, stuff that you might see from the curb, which is a bad roof, maybe, bad shingles or whatever, or it could be optional where, yes, the bathroom is nice and neat, but it's dated, 20 years old, dated, and so, the buyer would like to have, a new kitchen or a new bathroom or change the floor plan by knocking a wall down and opening it up. Where floor plans were a lot more choppy years ago. So all those types of things, cosmetic, flooring, all that stuff is subject to renovation. Typical mortgage with an additional a contractor's bid. So you have a regular mortgage. You are basing the price based on, maybe the need to do this remodel or sometimes the desire. And then you get the contractor's bid, you add the numbers to the appraisal, and the appraisal is an after repair value. So the buyer increases the homes that they can actually purchase, because not only are you looking at the ones that are perfect or looking nice and pretty, but you're also looking at ones that might be in the right neighborhood, might be dated, and now you can go in and put an offer in on those properties, which you might get a better price on because it may have functional obsolescence, and that would lend a different price than something that's been rehabbed and looks nice and pretty. So that's the reason for that. And then you can turn the house that you buy into the home that you love. So how these loans work? You have the house plus the renovation minus minimum down payment, and then that equals the renovation. So you make an offer on a property. Soon after you make the offer, maybe you win the bid, you have your contractor go through the property, give you a written number on what it's going to cost to get that property from where it is to where you want it to be. And the contractor should separate the labor from materials. And then the appraiser goes out, looks at the types of finishing, and he makes an appraisal based on that information. And that's how we get those loans completed, with one appraisal sometimes, most of the time, and maybe just a reinspection at the end. Seller doesn't have to make any repairs or do anything to the property prior to close. Probably would get a better price from this person than he would from an investor. When an investor's pure motivation is profit, the homeowner's motivation is residential for his family. So I think the price might be a little different. And then we have conventional and government options that are available. Benefit for the home owner. The renovations can include required repairs or optional updates. Doesn't have to be mandatory, just could be optional, things that they want. You can avoid reduction of savings by not using credit card debt. You can have it all in one loan, in one payment. And the mortgage is based on the after repair value. Benefits for agents is it could expand the location, or it could get you a better location, because now you're in a location that's good. The house may need work. So now you get to take that house and turn it into something pretty. And, that for the right buyer that has a little vision, they can get the finishes that they want. They can get the kitchen that they want, bathrooms that they want, and more than just like it, they may love it. And you're creating an inventory for your buyer instead of just going out there on what's available as it relates to the market, because the market on properties that need work aren't necessarily the ones that they'll accept your financing. But with this, sky's the limit. So now you can go to a seller and say, I can get you this as is, so you don't have to do work. We can get closed quickly, and then they can go do the work thereafter instead of the seller having to do the work and wait for a buyer or create more. So it'd be faster for the seller. Realtor benefits, more realtor benefits. You can close more transactions because this is going to give you an opportunity for a different client, maybe, or for maybe your seller. Maybe the seller wants to sell and get into something better, but doesn't have the funds to close immediately or to fix the house. So this would be a way or option. That's making my ears hurt a little bit. So it'll grow your business, and it'll give you some different options with the properties that are in the market. So what is a 203K? It's government insured. It has a low down payment, 3.5%. You can finance the purchase or the existing balance if it's a refinance, and the cost of the improvements into one loan. That's a really good thing. And the disbursements made during the rehab follow. The rehab is done, then the disbursements are made. So it does have a protection feature for the home buyer, because you want to get the work done first, pay second, not the other way around, because we've all dealt with contractors. Sometimes they're a little slippery. So different types of properties that you can use. Single family residence, you can do a 203K or renovation on. FHA approved condos, you can do a renovation. 1 to 4 units, you could do a renovation. This will help you sell hard to move property, because a person can have a little vision, they can get extra money, they can fix the property up. If it's 1 to 4, they can make it really nice, which means they'll get the upper level of rent. So that's good. And you might be able to pick a great neighborhood and a bad property, and at the end, they get to make that house the best one in the great neighborhood. So I think that's a great thing to do. Or let's say that a person wants to fix their fixer-upper before it goes on the market. That is possible. It needs to be done with, I believe, 6 months in mind, because they will give us a kind of a slap on the wrist if we have an early payoff. It's called an EPO. Not really for house flippers, but maybe for an owner who's going to be in the property and take a little time to get that rehab. So not just for foreclosures at all. This is for remodels. Here's the before of a kitchen. Bam. And that's it after. That's nice. Here's a remodel of a bathroom. Look at that. Bam. I like the way they redid that They redid that vanity, put the vanity there, and bam, put it down there with the, yeah, that's nice, nice kitchen. I mean, nice bathroom. And then, or just paint. You got a regular room, bam, turn it into that. This is the stuff that you can do. Now there's two easy options for the 203K. You have your standard and you have your limited. Limited is up to $35,000. It has less documentation. You may have to use a HUD consultant depending on the work that's going to be done. And the standard, the sky's the limit. You can do a much heavier, structural change to the property with the standard 203K. And you must have a consultant with the 203K. Yeah, so as I said, the limited is $35,000, less documentation, may need to have a HUD consultant, but may not. And the types of renovations for a 203, limited 203K, remodeling kitchen, bathrooms, paint, repair gutters, roofs, downspouts, repair and replace exterior decks, patios, porches, heaters, HVACs, windows, siding, doors, that type of stuff. Nothing structural. Yes, this is all limited 203K stuff. And then you have your standard, which is repairs, can have structural. You got a minimum of $5,000 of repairs. HUD consultants are required. And with this, you can even finance in 6 months of payments so that borrowers not paying for their home and paying for the new home, or paying for their old home and paying for the new home at the same time. Types of structural renovations for the full 203K, structural alterations, health and safety, of course, only $1,500 on luxury items like swimming pools. However, repair, place, install wells, septic. You can do solar, you can add sunrooms, remodel kitchen, bathrooms, energy improvements, fencing, drive walls, landscaping, etc. Very flexible. Now here's an example. You can have a garage and add an ADU on top, and then you can make money on a monthly basis with this ADU. Y'all could also do well in septic. You can look at this before and after on the kitchens. And then here are the different programs that we have, as well as we have the home style, choice, you got VA rehab, and you also have USDA renovation. So we have 5 different programs that we can help the clients. This is home style, help move hard to sell properties that need repair and updates. Fixer-uppers allowed, customization, and the ability to make existing home your own. And the good thing about it is it's close to the maybe a week and a half longer in process, only because you have to get the contractor bids, and then the appraiser goes out, and the rest of the process is pretty much the same. There's some consultation for the homeowner so that they understand the process, but our business partner on these will stick with them after the loan is closed to make sure that the construction part goes well and that they get what it is that they're looking for at the end. The one good thing about this FHA product is that the mortgage insurance will drop off, as opposed to a regular FHA where the MIP remains loan. That's a real good selling point. And then you may be able to finance 6 months of your monthly payment into the home during the time that you cannot act on. So now here's home style renovation. 1 to 4 units, 97% loan to value, which this is 97 because it's conventional. Max repairs, 75% after improved value. Minimum repair amount, none. So any kind of repairs you want to do, structural and non-structural repairs are okay. All we need is a AUS approval, no minimum loan amount, purchase or limited cash out refi. Person wants to refi versus cash. So for realtors, this might be a great program for you as well. So look at here. We also have the VA renovation. So they could come in with 0 down with this home on the left and turn it into this home on the right. I think that's an unbelievable thing to do for a veteran. And with that, they can make their, if they have some disabilities where they need their cabinets to be lower, or if they need ramps, or they need bathroom alterations, all that stuff can be included in this loan program. So just an unbelievable thing. Well, and especially I love helping vets. My dad was a 20-year Army man, and I was born on an Army base. So, I have a lot of love for gentlemen who work for us in the military. This is a 100% loan for VA, no MI. One closed for purchase and renovation, minimum credit score 580. All work needs to be completed within 6 months. Contractor approval by NORCOM, which is a place that's going to make sure that they take care of the veterans. And they vet the contractor, make sure he's who he says he is. Like I say, some of those contractors are a little slippery, and must qualify on a VA loan to be eligible for VA renovation. That has to do with co-borrowers and things of that nature. So here's the process. Same as always on the front end. Get a pre-approval based on person's cash, credit, and income. Then they get out in the street with the realtor and make some offers. In this day, it's a little easier to win some bids than it used to be. And then you get your offer accepted. Get your contractor out there to give us a number on the rehab. And then we have the appraisal done based on the after completed value. Then we take that information, go to closing based on the contract and the renovation amount. And then the renovation begins after the loan is closed. Qualifying. You need automated approval. For FHA, it's 3.5% down. For VA is 0 down. For conventional, it's 3% down. Single family investors, conventional only, 85% loan to value. So you need 15% down if you're going to do it as an investment. And the minimum credit score is whatever AUS will approve. Can't be any better than that. Qualifying, some more qualifying. Non-occupant co-borrowers are allowed. Gift funds are allowed. 6% seller concession, which in this market is coming back. And rental income used to qualify if you're buying some units and they have 2 or 3 extra dwellings. The rent for those you can use to help qualify. Great way for a person to become an investor. And the contractor must be licensed and insured, must have references, must complete contractor acceptance packet. You can be chosen by myself, by you, or the borrower, and must be able to provide a detailed bid, breaking out labor and material, so that we can make sure that they're being treated properly. And it also helps with the appraisal so that he understands of this cost, how much of it is material, how much of it is labor. Oh, one last thing. On the contract, with the 203K FHA, there cannot be a family relationship between the borrower and the contractor. HUD consultant is basically a home inspector. They will help the borrower get through the process and make sure the numbers are fair and accurate, and that they will help with the feasibility report. They're another layer of help so that the borrower doesn't get injured by the slippery potential. So the HUD consultants work closely together with the contractor and the borrower, and then they do the inspections to make sure that your stuff was done before the draw is cut. And here's what the HUD inspectors make per deal. So it's based on the amount of work that's done on the property. And the appraisal is, there's usually only one. However, sometimes they need to do two. They need to do a re-inspection at the end. So, and then sometimes utilities can be cut off. And so they'll, kind of help get that dealt with. So, and there could be other reasons why you have optional repairs. There may be some, like the power may be off, so something may not work. And then when the power gets turned back on, something's still not working. So there's a contingency that's built in for things of that nature. Why renovation mortgage for why us? Well, our partners, our experts, have over 30 years of experience. And so what that means is that once the loan is closed, the real estate agent and the lender have been paid, there's still somebody that's going to sit and help the borrower get through the process. And that is what their interest is. We're not contractors. We don't necessarily know that process like these guys will know. So they'll make sure that everything is done right, the draws, and we can be cheerleaders and wait for the housewarming party so that we can help them celebrate their new home. That would be a great housewarming to go to. My Nexa Mortgage partners, because of that relationship, they're going to get a dedicated customer service staff person to answer all questions every stage of the process. Also, for us, it's good to know to set the expectation right. This is a different loan. It's not when you sit back, you got to stay involved. We have our trusted partners that are consultants, contractors, loan officers, realtors. And then the property doesn't have to be broken. It can just need updates. And we're the experts. So at the end of the day, we make sure that everything is done the way they want it to be done. And we stick with our clients until it's done. So so like I said, we can get to that housewarming party and enjoy the new place. So I want to say thank you for watching this video. Hopefully it wasn't too long. I was trying to speed through it so it didn't take forever to get through. And if you have any questions, call me. See you soon. You have my numbers, my email, my website. Have a great rest of your day. Take care.